I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market had its second choppy week in a row as investors were hooked into reacting to every move in cryptocurrencies. Monday brought selling right out of the gate as crypto cracked. The Bitcoin at that point was down about 1/3 from its peak. And notably, gold and silver got a bid that day as money was just floating around looking for a home. And finally, some found its way into the metals. Tuesday, an overnight rally attempt failed as yields popped and Bitcoin cracked again. Investors acted to reduce risk as the S&P 500 fell for the day about 37 points, and that was the worst day of the week. Wednesday started out like a nightmare. Again, crypto in collapse. Bitcoin falls down to $30,000. That was down 54% from its peak. Purely a crash. News came out that the UK, EU inflation numbers were up big, and yields popped around the world. And when the market opened up, the S&P fell quickly to minus 67 points. Gold moved up pretty strongly also, as again, all of a sudden gold is looking better. We'll talk a little bit more about that. Stocks did, though, reverse to the upside into the Fed minutes, as everybody always assumes the Fed is going to be so dovish. But then when the report came out, we had another move to the downside that was pretty quick. FOMC minutes really hinted at policy change if strong improvement in the economy continues. Overall, members were really saying that a lot of them were ready to begin a taper. So that did upset investors pretty quickly, but then the market did want to rebound from some of the big down days it had, and from minus 67 on Wednesday, it only closed down 10 points. Thursday brought overnight soft markets, but three things lit a fire for investors. First of all, jobless claims came out, the lowest numbers since the pandemic, and then Bitcoin rebounded. And of course, when you had a big rebound the day before, which helped the market gain a lot of those losses back, then crypto going all the way up to about 42,500. Some relief came from the people that are afraid that the big bubble had popped, and bids came back in the market. So you see there's a lot of linkage right now between bubbly markets and the stock market. And then a report came that some Democrats were pushing back against the capital gains tax increase. And that, of course, was better news. And then just to add to that, the bond market got pretty strong. And right now we have bonds on a lot of days leading the market moves. We have that actually going on right here now on Friday, as bonds are up a little, and so is the stock market. Later in the day on Thursday, crypto gave up its gains as the Treasury came out and said that they want stricter reporting to the IRS. And they talked about specifically transactions over $10,000 worth of cryptocurrencies or more. And that, of course, would end the privacy aspect of cryptocurrencies that the crypto lovers are so proud of. And that was an aspect that made it so different. But stocks really stayed strong all day long despite that. As beaten up stocks that had given a lot of ground in market gyrations that we're having now started to rebound. Specifically, techs and solar had good rebounds. I actually think that that group is going to be, both of those groups are going to be moving down again. For solar, though, I want to say that while we're looking for a decline over coming weeks, overall, I think that group is going to be a better one moving forward. So we're looking for areas for entry on the solar stocks on the long side. Friday, here at midday that we're doing this video, stocks were up pretty strongly. We saw them move up close to 30 points for the S&P 500, as if all of a sudden, well, inflation's not an issue and bubbles popping all around are not an issue. And the focus was on a stronger economy. But that news did stall as home sales came out, down for their third month in a row, and prices again moving up to a record level. Now, while that seemed to stall it, the market did turn lower pretty sharply, quickly, as the Nasdaq moved to the downside, as news came out that China is cracking down on cryptocurrencies, on mining and trading. So all of these reactions to news on cryptocurrency are affecting the stock market very significantly. And this linkage to cryptocurrencies is something that we have really not seen before. Well, maybe not seen before. We would say that if you looked at last week's special that we did, the crypto casino, and I think that's really a little video clip which we now have put up on YouTube that is worth looking at. And that was extremely well timed, as crypto, of course, fell precipitously in the last week. Well, that pops the bubble that we had talked about, and we showed that the first leg down was really down to about 34,000, possibly down to 27,000. Cryptocurrencies were very weak, and the Bitcoin getting down in between those levels to about 30,000 last week. Well, we still think that they are going lower. That 27,000 right now is kind of our first target at this point. And the cryptomania that we have seen, it is really a reflection of the everything bubble. That bubble that has been created by the massive stimulus from the Federal Reserve, and now the massive fiscal stimulus planned by the Biden administration. That's what drove crypto up, and the driving up the everything bubble that we have seen. But that all creates massive distortions. And the real free world, free economy that we hope that we would have here in the U.S., well, that clearly is gone, as the manipulation that has gone on has blown things up all over the place. An example of the huge distortions that we see are we're still in a period of relatively high unemployment, especially when you look at the U6. But at the same time, we have high unemployment. We have labor shortages all at once. I mean, that's just one example of the craziness that's going on in this economy and the malinvestment that occurs when you have invasiveness by the government into the markets. All along, we've been talking about this bubble, and now the everything bubble, we think, has really started to come apart. There were signs of that actually some months ago when we showed the stay-at-home, work-at-home stocks that had gone to levels that were just incredibly overvalued, that we thought that they would come apart and we would have some pretty sizable declines. And we showed many of those, and that happened. That might have been the first of the pandemic bubble that started to come apart. Now we have the crypto bubble busting, and I think that the stock market is in for a lot of trouble. Not as severe as I think that the crypto market is going to be. In history, manias lose between 80 and 100% of their value. So we're not saying that, of course, for the stock market, but we are saying that for the cryptocurrency market. And that's going to weigh a lot on this highly speculative atmosphere that we've been in, which we think has really come to an end. And this Bitcoin drop has been the proof of it. So our analysis has been that May and June would be a big choppy time period where the market was making a big top, and then July, August, a big drop. May, June, a big chop. July, August, a big drop. That's been the analysis, and we're sticking to it. Stocks, well, wide swings and basically sideways to lower is how they're ending up for the week, just slightly lower. Bond market gains about 1/4 point. 10-year yields are trading at about 163. That's about unchanged on the week. Gold market, well, that has moved up 30 points, $30 for the week, and we have upgraded that. Silver is traded up to 29 and reversed, and didn't have as good of a week, really unchanged, but we think silver's headed over 30. By the way, we came out very bearish on platinum, and that is showing a breakdown today. So those patterns really giving us some of the evidence, trade expectations that really work. So platinum, we think, has had a breakdown. The dollar, small decline for the week. It's really very weak, and I think that the Biden spending plans are really weighing on that. And oil, well, it's up on Friday pretty significantly. Right now, as we speak, it's up almost $2, and that's about a 3% gain, but still loses about $1.60 on the week, pulling back pretty sharply. Now, those oil patterns and energy patterns, we think, are still in decent shape. So I would not be saying that the declining week we've had is anything that serious for the energy markets. Coming up, we're going to show you a preview on our member video on international markets, where Arvi is going to show you 2 of the key world indexes. I'm going to bring you the momentum tracker, and we're going to look at the biotechs for the longer term for investors, and I'm going to demonstrate this momentum tracker with our new chart on there that is provided by TradingView, a fantastic charting program. So you're going to be able to see how the indicators work and how they are now laying out on TradingView charts. S&P 500, we're going to look at that, and the Nasdaq, and we'll compare them and get a 1 to 3 month view for the stock market. So that is what is coming up. All right, so I want to remind you to please do go to the askSlim.com website, explore that, make sure that you do become a member. Go to the YouTube channel. If you're not watching this on YouTube, do subscribe to that channel. Click the notification bell, and you'll get notified when our many videos go up each week. Make sure you give us a thumbs up on this video, and if you use Twitter, follow us at askSlim. Any questions on our memberships, info, and huge offerings that we offer in education and analysis, please do write to Matt at askSlim.com. All right, so we are alternating every week in here and bringing you previews of member videos. We want to really share with you, if you are not a level 2 or 3 member, the things that we put out for our members. So we bring these previews to you, and we're alternating between international markets and different stock sectors to give you a good taste and good analysis of the things that we do bring. Right now, what we're going to bring you is a look at the Shanghai Exchange and the Ftse, and I think that you're going to find this preview of international markets to be extremely interesting. More info, right, Matt, at askSlim.com.
So this is the Shanghai here, and this is a pretty interesting pattern now forming. Last week we really were looking at more range-bound trading, and we have a real sign of change here on the daily. Prior to looking at the daily, let's go ahead and first look at what we're seeing on the weekly. So we had an intermediate term bottom due to form. The intermediate term low was due 5.6 to 7.19, and we have entered into that timing window for a bottom to form. You'll note that our weekly momentum right here has now turned positive, so that's something that I do want to note here. And there are some clues that a bottom has actually formed here in the Shanghai, and we would look for the Shanghai to rally up to really at first this 36.45 level here on the upside, which is the intermediate term 78.6 fib. If I show you the signs of change here, you'll really see them on this daily chart here. So you can see we had this large sell-off, and then we formed a basing cycle with a cycle low that's higher than the prior cycle low. And now we have moved through this prior cycle high, which is really setting up a much more positively configured daily cycle. And what we're really just looking for is a mild pullback and then a push back to the upside. On the downside, we have a short-term 38.2 to the short-term 61.8, which comes in right around 34.70 to 34.37. We will look for that zone to hold and then for a push back to the upside. The next short-term low is due 526 to 6.7. So a pretty interesting pattern setting up here in the Shanghai, and one that does look really quite favorable here in the short term. So this is the Ftse 100, and what we see here is a very positive overall pattern. You will note that this is weaker versus the CAC 40 and the German DAX, as we are still well below this recent swing high from January of last year. So this still does have some work to do to play catch up here on the longer term. But what we're seeing is just a bull flag forming here in the Ftse 100. You can see these tails forming versus this 6,800 level, just indicating that there is buying around that area. We are just looking for one more test down and then an impulse back to the upside. We have entered into the forecasted timing window for a bottom to form. The intermediate term low is due 5.3 to 8.2. So just wanted to put that on your radar. So we are watching this one very closely for a bottom to form. If we go ahead and shift over to the daily chart, you can see that the Ftse 100 had a breakdown below this key low at 68.34 and now is just basically going sideways. What I want to note is there is a minor cycle low due right around now, and we would look for one more test back up and then a failure back on the downside. So that's really what we're looking for in the Ftse 100. We will look for the Ftse to really get down to this short-term 78.6 fib around 67.39, and then to get that next impulse on the upside. So if we get this pattern to form and then the breakdown below the key daily cycle low, that would really tell us that this weekly forecast is in play and very likely setting up for a nice buying opportunity here in the Ftse 100.
All right, great work, RV. RV is one of the experts in the world on cycle analysis. He and I probably make up two of the top in all of the world that follow cycle analysis and have developed this version of it, and I hope you find it extremely interesting and do try to adopt it into your analytical style. So I think it's extremely valuable and very rare to be able to do analysis that not only looks at price but in time also, and that is one of the keys to cycle analysis. So absolutely great work. All right, we're going to switch over now, and I'm going to do something a little different. I'm going to put up our momentum tracker, which is really for the for investors or for position traders. It gives analysis out 3+ months based on momentum. And I'm going to look specifically at the biotech sector because I think it's really interesting. The momentum, in my opinion, is so important. Understanding momentum and momentum conditions, because it's really the forces that keep the markets in motion. And it really helps you to stay in your positions, which the key to long-term success is maximizing your gains. I don't care if you're a day trader or a scalper, or if you're a trader that holds positions for long periods of time and does option trades, or if you're an investor. Really being able to maximize your trades and hold on to the positions is a key to success. And understanding momentum is really the core of that. So I'm going to show you this, and also I'm going to preview for the first time, bringing this out to the public, that we have now embedded TradingView charts into the momentum tracker, it's just a great charting service, and it really fits well with our work, and you're going to see that when I look at it. First thing we have to do is go to the askSlim website, as you see right over here, and you can see in there, there's lots in here you can look at. I'm just going to scroll really quickly, and you can see all the information that we offer here just on the front page. Yes, Thinkorswim, TD Ameritrade's our preferred broker, so if you want to open an account there, please do it through here. You need to be a TOS holder in order to use our proprietary indicators, which you can learn a lot about right in there. And of course, we have workshops that you can learn also, especially the five essential building blocks to successful trading is really looking at the emotional side of trading, and the cycle analysis workshop, which just is phenomenal. So what I want to do is I want to go to the workbench, essentially, and you can see that as I scroll down, workbench right here. And we're going to look for the momentum tracker that you could see me highlighting right there. You just get an idea. This is the hub of askSlim, and you can see all of our level 4 members that are asking for custom chart work, which we offer only to level 4 for Thinkorswim. And you can see our trading idea will happen to be on the biotechs for today that we put out, and Arvi gives you a training video on every single one of those. So again, it's really important if you want to see those training videos and our trade ideas to be a level 3 or 4 member. So what I want to do is I want to go to the momentum tracker. So I'm going to click on that, and it's going to open up the momentum tracker for you to see. Now, this is a phenomenal app. It is just, there's nothing like this in the world, especially looking at momentum conditions. And what I'm going to do is I'm going to select one of the canned lists right over here, and specifically I want to look at biotechnology today. So I'm going to select that, and it's going to open up the biotechnology list of stocks. It's incredible how much is in here with 20 different canned groups, and we'll be adding more. So what I want to look at is the functionality in here for you to see specifically. You get the symbol and the company and the directional bias. That's really key. Now if you look here at this setting, this directional bias setting gives you the pie chart results right over here. So what that tells you is that in the biotechnology, it's pretty mixed. 42% positive, 26% negative, 32% are neutral. And then you can scroll and sort in here. I'm going to sort right now by the very bearish ones. And I want you to see that what's coming up here is that you're getting long-term momentum conditions, intermediate term momentum conditions, and short-term momentum conditions. For Global Blood Therapeutics, GBT, our directional bias, which is the sum of the evidence of all of this momentum information, is very bearish. Weak negative conditions suggest failed rallies and lower prices. And you could see the same thing right over here as you look at Ionis and IOVA. That's I don't follow that one. It's Iovance Therapeutics. These are all three very bearish right there. If I look at the stocks that are very bullish, I just click on that directional bias and sort on that, and you can see very bullish, a couple of them right over there. So also you can sort on the long term and see which are very bullish or bearish long term, or you can short intermediate term or sort short term, as you can see right there. I'm going to go back to the directional bias, and let's look at GBT just for an idea on how important this is to have a sense of your overall directional bias, right? You don't want to be in a stock that's very bearish, because it's pretty hard to time a bottom when you have a stock under those conditions. So I see this little down arrow, this little arrow here. I'm going to click it down, and what it's going to give us are the metrics and the date that some of these things changed. And you can see right over here that it is now very bearish when you look at that. I'm going to go to the chart, and one of the real reasons I wanted to do this today was so you could see the embedded trading view charts right over here. That's supposed to have their trading view logo. There it pops up right over there. Okay, so you can see that when you look at this, the different intensities of the directional information, the directional bias show up. So you can see in here where it's this big red arrow, it's under condition of being very negative. And take a look at, and you can see it was very negative here, it caught the big break, and it stayed very negative through all of this period here where you got a rebound, and it got a little less negative there, very negative, negative, very negative, 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 very negative. Look at this, how it kept you on the from being wanting to be a buyer in here, or maybe even finding a place to be a short seller in there. So that's an example of the simulator rankings using these charts and seeing what these momentum conditions are when you look at that. So that's pretty phenomenal. Let's just take a look at one on the very bullish side, Alexion Pharmaceuticals. And I'll just open this one up and we'll go to the chart, as you can see right over there, and look at what you're seeing in here. All of the momentum conditions, now I'm going back, way back over here, all of these momentum conditions, positive, 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 very positive, positive. Here it went to slightly positive. You can see that, and stayed positive here, the big gap up, and very positive all the way. And look at this, very positive here and takes off huge on the upside. So ALXN, Alexion Pharmaceuticals, you can really get a sense for how important it is to really get a good handle on the momentum conditions. I'm just going to scroll down here so that you can see these stocks in the biotech category. You can see all of these that went from very bullish to bullish, and now you're getting into slightly bullish. Well, why is that? Because you can see that there's some conditions in here that are not particularly positive when you look at that. So when you have all three green across, it's going to be very bullish. But you could see these are still slightly bullish. They're okay. Here's some that have turned negative on the short term, and it's really telling you mixed conditions await further messages in the market. Generally, if it was green, green, red, I would say you're probably just getting a dip in a bullish condition. When it goes green, neutral, neutral, or green, neutral, red, then you really have to wait. You could see here neutral, and now we're getting into slightly bearish as I keep scrolling down. Regeneron, slightly bearish. When you look at that, it still has a green short term, but that actually might turn more negative as I see the long term being negative in there. And I'm just going to keep scrolling all the way down here for you to see some of these other symbols, and you can see the quality of the information in here. You can look at this pie chart. You can take a look at, well, what's the percentages of the long term? Well, it's pretty mixed again, as you can see. When you look at that, when you look at the intermediate term, very mixed, a little bit more positive maybe. And when you look at the short term, well, it's all pretty mixed. This is a pretty mixed group when you look at that in the biotechs. Remember, these are all of different groups that you can look at in there when for using the Slimulator momentum tracker. So I want to go back to the workbench, and just so you can see the things that are available in there, my worksheets, my trades, and those are your own things that you can do, momentum tracker rankings. So let's take a look over back at the website and just come down over here where the membership options are. If you want to become a level 1 member, which gives you that momentum tracker, we have a special now that is so incredible. Only $14.95 a month, and if you take 3 months worth, it's $30. It's $10 a month. You're going to get our Market Week archive. You're going to get our workbench with all of that information right out of the hub. You're going to be able to do your own trade planning worksheets. You're going to have an organizer for your own trade ideas. You're going to get that Slimulator momentum tracker. You're going to get the amazing weekly report, stock index report for the indexes every single week, and you're going to get our ETF review. All you got to do is come here and click read more, and you're going to get even more information. When you look at that, you'll see that all of the things it features, how to access them in the new workbench, things about the trade planning worksheets, fantastic information, and how to set up your own trade ideas of the work you do. Here's the simulator momentum tracker right over there. And you can see our weekly stock index report and the features in the stock index report. Yeah, that's me in the 1980s looking at paper charts because there was no computers that we could do this cycle analysis work on. So that's me in the 1980s sitting there with all of my paper charts in front of me, and all of our great comments from our members. Spider Weekly ETF Review, all of the information on there. All you have to do is click that Buy Now button. That's going to come. This is going to come up for you. You see it says $14.95 right there, but switch this over to the 3 months, and it's only $30 for 3 months. And that is how you sign up. You don't like it, you want to cancel, all you have to do is let us know and cancel. And it's really easy. That is the momentum tracker. That is the preview for our level 1 special we're running now. Everything that you get right here. You want to have any more information, just write at matt@askSlim.com, and he'll give you all the information you need. $14.95 a month for all of that, or take it for 3 months for that special price of $30. Absolutely amazing. Here comes the Market Week look at the stock market. We're going to look at the, it says here SPY and QQQ, but I actually switched it to look at the cash indexes, the SPX and the NDX. So I'll do the SPY and QQQ another time. I just didn't change this slide, but what I want you to see is this chart right over here. So we're looking at 2 charts. And we're looking at cycle analysis. Cycle analysis, as you saw Arvi do earlier in the show, is a way to understand the money flow, the rhythms in the market. And there are rhythms in the market that go on and on and on. It's how we project in time and price. And we use multiple time frames to be able to help us with that information. In this case, we're just going to look at weekly charts. And what I want you to see is the similarity, of course, between the highly correlated S&P 500 and the Nasdaq. And if you look right over here, you can see a cycle low where there is nesting, multiple cycles that come down. And then you have this cycle right over here, which is due to come down into August. You have this similar thing going on right over here in the Nasdaq, and that cycle due to come down and nest with other cycles here in August. So the S&P cycle on the small one we also overlaid in here. Now there's a few things that I want to look at. First of all, I want to show you the rhythmic action in the market. So I'm going to blow up the S&P 500. And now I'm going to show you these cycles right in here. This is a very busy chart, and it's hard to see if I have it expanded way out because of the notations. But here you can see is the cycle that brought this big decline. The yellow zone are the declining phases right there. And then this one right over here and this one right over here. These are the bigger cycles, and we're not really going to focus on that. We're focusing on the smaller cycle, the one that bottomed right in here and the one that's due to bottom right in here. That's the same thing we're seeing in the Nasdaq. So I'm going to take a closer look right in here and just look at the last cycle and a half right over here and right here so that you can see where we are. So the S&P 500, we were talking about the market beginning to peak here in May and then come down to support right over here. So you can see that it just held above support right there in the last 2 weeks and kept rebounding. Now I want to note that these last 3 candlesticks here are called hanging men. Generally, when you look at a hanging man, when I did a video way back in 2015 on the psychology behind each of these candlestick patterns. And what a hanging man essentially means is that you usually get them at market tops. And the psychology behind it is that there are buyers that keep wanting to come in because the market's been going up, and they buy the dips. They still think the market's going to go up. But what happens is that it's actually meeting resistance. And that's why it's not really moving up to new highs of any significance. So the buyers in this period right here are likely to get hung. That's why they call it that. And these candlesticks right here over here are warnings. Now, this could be the low of the minor cycle we were looking at right here. I actually think it's a lower probability than coming down for the next week or week and a half and testing this level again. And then we get into this period right over here, which is the potential for taking out the highs. And that comes out into later in June. So the decline here into some part late in May is what we were looking for, another rally into June, and then into this big period of risk coming up there where that big yellow oval is. Now I'm going to blow this up for you to see a little bit better because I want to show you that the upside projections for June are either getting back up to this level and getting into this failure area, or making a new high with the S&P 500 getting up above 4,300, maybe 43 and a quarter before that comes down. That is still a possibility in here. We're in this choppy period in May and June, and I think we're going to really have two-sided markets for trading when I look at that. When I switch over to the Nasdaq, you have a different condition. First of all, it broke further down into support. Also, you lost the upward momentum. Your momentum now has turned negative. And the probabilities of this getting up to equaling that high are much smaller than in the S&P 500. What that tells me is that for this next 3-month period that we're looking at, that they're probably both going to just have a lot of gyrations in here, with the S&P 500 probably taking out the highs by either a little bit or getting up to some 43 and a quarter, but the Nasdaq continuing to lag. And then after that occurs, we get into this riskier period right in here where, didn't mean to do that. Let me just bring in that cycle right there and right here, where the projections are for declines down at best case we have a major 23.6 down over here. And what that says is that the projected minimum decline into August is 11% from the peak. The projected minimum decline for August for the Nasdaq is about 13% from the peak. That is the sum of the evidence based on price and time for this cycle analysis that I'm presenting to you, with the Nasdaq being in weaker condition and having lost its upward momentum that we showed right there, but the S&P 500 in stronger condition and still holding that strong upward momentum right over there. A lot of chop likely coming in here and in here, and then a decline to those supports down over there or down over here, which are around the 23% major fibs. There is a possibility that they get down to the 38.2% down over here. That's 34 and a quarter, and a much bigger decline for the S&P 500. And this down over here is around 11,240 in the Nasdaq, which are pretty sizable declines. I'll talk more about the big picture and why I think that if it did follow this analysis as expected, how this is likely going to be the setup for the weaker second half and bear market that we are expecting in the market. So this is the picture that we're looking at. Again, I'm going to blow it up just right in here and right in here for you to see that the expectation is for, and you can see the projections in here, the likelihood that there'll be a lot of chop right in here, that the S&P 500 will rally to at least that high and potentially 43 and a quarter. The Nasdaq will lag on that move, and both of them getting into a lot of risk. Choppy in May and June, and a big drop in July and August is how that sets up. That is the comparison of the S&P 500 versus the Nasdaq. I hope that everything in this show has been amazing information for you. Please do either become a level free member or our new level 1, and go back and look at that demonstration I did on the momentum tracker. If you have not seen that, please do subscribe to our channel and give us a thumbs up, and watch our member videos in some of the playlists in there. Follow us on Twitter at askSlim, and for any information that you need regarding askSlim.com, you can just get that by writing to Matt at askSlim.com. I want you to be so careful. It is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been